And as we do each and every Monday at 3:15, folks, we're going to jump over to our man Steve Rhodes. You can check out Steve every trading day, folks. The Trader's Edge, 11 a.m. Eastern Time. Mark it on your calendar. You can also check out his outstanding newsletter, Mastering Probability, folks. Check it out right there under the newsletter tab at TFNN. You can subscribe. It's $149 for a month. It comes with a 30-day money-back guarantee. He's got updates in the morning, updates in the afternoon, folks, and you come with many great webinars in there as well, and we're going to talk about some of that market action right now. Steve Rhodes, good afternoon.
Good afternoon, Tommy. Great to be with you. How are you today?
I'm doing well, man. I know you always love those golf matches. You catch any of that Ryder Cup this weekend?
Yeah, hard not to. Disappointing the first couple of days. That's an understatement. But really, and I think I posted in the den as I was really looking at the teams and the pairings, it looked to me like the U.S. was going to have a difficult time, and most certainly they did. But like anything, it's really a game of confidence. The mental piece of the golf game, especially at that level, really takes over. So I thought it was pretty cool for all the golfers out there for yesterday's match to run all the way to about the 5:15 type time frame. Right. There was a bit of controversy with regard to the way the points are distributed because an instance took place that doesn't happen very often, which is one of the players had to pull out because of an injury. And, in a normal sport, let's say, so I play sports where you play teams, golf, for example. And if one of the guy, shows up with a broken arm, you don't get, you got to play individually or you lose the match, basically. In this instance here, out of the spirit of the way that the games were designed, each team got a half a point. So whether they played or they didn't, in the end, it turned out maybe that wasn't, much of a factor. It certainly wasn't a factor for them being able to retain the cup. But whether or not they really won or not, so it doesn't matter. It was great golf, I thought. Did you get a chance to catch any of it?
I did. I was watching some of it, and then you're making me think about I stayed up late and I watched Sunday Night Football, and then we got a tie, and I'm staying past midnight, Steve, which for me is like staying up till 4 a.m. You know what I mean? There was this, the Packers, the Cowboys, an amazing duel. And it ends in a 40-40 tie at midnight. And I said, what is going on here? This is not, So I
finally turned that game off. I couldn't stay. I was pretty
It was
tired,
so good, and that's the killer. And just even with the Ryder, it was so good, man. And it's just such a bummer. I was saying college kids play to the end, man. Can't the pros? I think they'll figure it out because I think anybody, let alone the 80,000 people sitting in the stands at that game.
Oh, for sure.
Two great teams. Sure. Just an amazing game. Amazing competition. Sure. Like you said, and the mental aspect, everyone's fired up, and then there's like game over, tie, right? Or they're like, hey, you're making me think of ties with those half points. So what do you think about this market, Steve? What are we looking at, man?
So I do have some stuff that I prepared for you. But before we do that, just because here at 3:21 in the afternoon, one of the tools that I use is the Spot VIX Index. And that's the lower left-hand panel of this chart here. And what we can see is so the blue line on there, which is currently priced at 1611, represents the 50-day exponential moving average of the Spot VIX Index. What I have found is that when price trades above or closes above the 50-day exponential moving average, what it does is it provides sellers with an edge out there. And that edge, we combine it with just simply the market breadth out here. And the market breadth is somewhat determined by taking a look at the advanced decline line, but then we apply an oscillator to it. And it's the difference between the 39 and 19 period exponential moving average. That happens to be panel number 3 on my chart from the top, panel number 2 from the bottom. And what we can see right now, it's printed out at a minus 86. Anything below the zero threshold level provides sellers with an edge out there. So the interesting thing here at 322, we can see the ES Mini is still up by 4.5 points out there. And I don't know where the Spot VIX is going to close, but if it does close above 1611, that would suggest to me, and we'd have to go look at intraday charts. So we're going to start to see and as you pointed out, the market's really been pulling back since about 9:30 this morning for the most part. I expect that will, if we close above the 50-day exponential moving average, I expect overnight we'll see the same kind of action out there. So I thought I'd point that out to everyone. We also, on the very right-hand side of the chart, you've got the ES Mini. Right now it's got the continuous contract. Let me just throw this in here to be more accurate, if you don't mind. And because what we'll see here is that price is really consolidating with inside its daily profile. I put in the wrong thing. Give me a moment here. And price did get up to the top of that profile. And I use profiles. It's another tool. Helps us identify where support and resistance is. So as an example, today price got up to 67.36. The top of the profile, 67.42 out there. So we just have a consolidation. Nothing broken at this stage of the game, but you would want to watch profile support to the downside, 66.54. If we start closing below that, we're going to get a change in character to the market. Now, what that leads to, we'll come back and we can take a look at that. But any questions about what I've shared so far?
No, I love it, man. I'm following along, and I love the just actionable data, as you put it, for sure.
Perfect. Okay, so we're going to talk about gold, something near and dear to your heart. There was a question that was posed to me during the Trader's Edge show this morning, which was to be able to take a look at, in essence, I've recreated Bud Rolfe's charts out there. And here is a monthly time frame chart for gold. Those red horizontal lines are what Bud used to call primary trading ranges. I refer to them as horizontal trading ranges only because I use his technique, but I've done it differently. He used to eyeball things. I've just simply automated it so it identifies what the real levels of where price has traded. So, for example, on the very right-hand side of the panel, we'll see that they're at $299.50. Okay, $299.50. We're talking about gold. It's $3,800 right now. There was 57 opens or closes at that price point. The next largest price point was at $12.78. That had 29 opens or closes. So that helps us to identify key levels of support or resistance. And then what's in between those two, I create some midpoints, which are basically halfway there. This chart here for the monthly time frame, because what people are trying to understand is there some kind of a top? What this tells me is that price wants to move up towards the 40.25 area. That would be the next rising price channel, maybe 4207, which would be the next horizontal trading range. We've got an A to B equals CD pattern that gets us to the 1 to 2 level. We started this back in 1999, Tommy. That would take us up to the 43.86. So that's the monthly chart. I'm going to go kind of quickly because I didn't really intend on spending as much time as I did on the spot fix, but it's so pertinent to trading, at least for overnight traders. Here's the weekly time frame chart, same kind of thing, but weekly data, and you can see we're trading above 38.27. That is a horizontal trading range boundary line. As long as we remain above that, 40.63 is in play on the weekly time frame. Today, gold is at new all-time highs in every single major currency out there. And even though the Russian ruble is not a major currency, I'm still paying attention to that because of the war and the geopolitical events that are going on. These are the best bull markets. When an instrument is rising in all major currencies. This happens to be gold priced in the majority of the Middle Eastern currencies. Oddly enough, I haven't been able to make heads or tails as to why, but these are trading higher in all of those currencies, with an exception being the Israeli shekel. So I don't know what that means necessarily, but again, we've got a rally going on across the globe in gold out there. So those prices that we took a look at, they're more likely than not. You know what I mean?
Yeah. Yeah, those are and I know we're flying, man, but those are some strong charts. I love how you pull it up, gold's just been plowing higher as the dollar really hasn't been pulling back. So if we just go ahead, please keep going.
This is a yearly chart for gold. You can see that we're going to be in bar number 9 of a TD9 count. Tops usually take place in bars 8, 9, or the bar following 9. The last time gold made a significant high, it was the bar following bar number 9. I'm going to go with that as more likely that we see a high next year. Not this year. Monthly chart tomorrow is going to negate a TD9 count top. That's a very bullish signal. There is no weekly topping pattern that we have in place, and today gold's going to negate its daily Rhodes Momentum Indicator top. So tell me, we continue north in gold.
Yeah, and the volume's been there, man. I got just the futures up right now. There's strong volume on this whole way up. Steve, some great information as always, man. We look forward to the Trader's Edge tomorrow, and I'll talk to you next Monday, man. Have a great night, Steve.
Take care.